Morning everybody, it's Chris here from Serene Education with the formation analysis update for the 31st of October 2011. Just going to start with Euro against US dollar this morning. Hope you all had a fantastic Halloween weekend and are back in the swing of things. We've had some interesting developments overnight. You've seen, for example, the Euro against US dollar, in this case, fall from its highs that we saw last week and setting up what could be the potential pullback. You'll notice that it's trading below the institutional moving average again on the daily time frame. Here at the 1410 institutional moving average, we've noticed a major pullback. This on the intervention news. US Japanese yen, we saw an intervention last night from the Japanese government, but we've also heard in as many days that even though we had the good news coming through last week of the bailout, the plans for the Eurozone, there is still an ongoing issue in my eyes of the Italian debt. It's a big talking point, and I feel that's going to be the next one to be addressing. $1.3 trillion or euros, of debt is quite a substantial amount, and the European Union will probably want to try and see if the Italians can actually try and start coming up with measures to try and stem or trying to work on their debt issues. What we're seeing now is a pullback on the daily taking place after a pullback from the highs that we saw. And if you look at the 4 hour, for example, CTC is still in a bullish upside trend. Notice that will happen bouncing. You can see quite clearly the 1400 we've known for some time has been a very strong support and resistance level. There we go. I can just make it nice and thick. Is in play as we speak. Price on the 4 hour time frame is trading slightly higher than. Ideally, if it trades below that, then we could see potentially this area here where we had consolidation, which brings us back to 1395.50 and the major upside trend back into play along this level. All the moving averages spread, 20 period moving has been breached. It'll be interesting to see if the 1400 actually stacks up today. If we see a break below the 1400, then we should be looking at 139500 as our next potential target, which takes us back to those prior resistance levels here. Quite a lot of ceiling level here, and this is where before we saw the breakout a couple of days ago. So pulling back quite noticeably, a lot of indecision, very small trading ranges over the past number of hours has seen price really falling back, failing to keep those highs, and now it's trading against the 1400. If it fails to close above 1400 on our intraday time frames, let's have a look at the hourly. 1400, there we go. Price, you can see, is still trading above it. However, you can see that the hourly candle that's in play right now is seeing some pullback. This candle has to close physically below this area here. CTC is in our favor, as you can quite clearly see. And if that's the case, then what we could ultimately be seeing is 1395 being retested quite soon. That's where we had a lot of resistance or a lot of hesitation. A break below that, then we'll definitely see 13900 as a second potential target, and third potential target way down here. We've seen a lot of support and resistance roughly around the 138200 mark, which will take us back to prior support and resistance well below the institutional moving average. So quite interesting. Let's see if 1400 stacks up for Euro against US dollar. If it fails to, then we should see further extensions today down to 1395, 13900, and possibly 138200 for this pair. Next up is sterling against US dollar. Here again, we've seen price trading into the 1500, which happened to be the institutional moving average after the 1600 was breached not so long ago for this pair. Noticeable resistance here at this level here over the past couple of days, leading into the momentum we saw on Thursday and Friday. However, that's failed to stack up, and we've seen sterling opening way lower than the close on Friday. We know that the US dollar, the Japanese market government has intervened, and we've seen the US dollar trading higher. What we're seeing at the moment now, especially on this particular pair, is price trading above or roughly around the price support and resistance level previously before we saw the breakout here. But we are going into a consolidation range. You can quite clearly see between 159500 and 1600 We have seen prior support and resistance in this area here. A lot of consolidation prior to the breakout, and a lot of consolidation before we saw the break lower previously. So in this consolidation range, CTC is still blue. However, as you can quite clearly see, upside movement definitely depicting price action to the upside, and you can see that upside trend, if you're checking the wicks on this pair, is in play. If you take the bodies, it's exactly the same. So we are seeing on a daily time frame, we're seeing the major upside trend in play as we speak. Are we going to see consolidation now and a potential bounce being found? And we're going to see exactly what the daily chart closes like tonight. On the 4-hour CTC, you can see is quite extensively to the upside. There again, you can see the upside trend is in play as we speak. So, are we going to see consolidation at this area? Ideally, we want to be trading above 1600 because we know psychologically that happens to be a very strong support and resistance level. Failure for this pair to be trading above that area, which is confirmed that we are likely to see further consolidation to the downside. We had a slight support here at the 159500. Hesitation there, and then ultimately way down here at 15800 we saw further consolidation. So that'll be our second potential target. Our third potential target will take us back to just around the 15700 mark, which happened to be the prior support and resistance as well as the institution moving average. So we have three targets to the downside if this upside trend here fails and the 1600 fails to we fail to see price trading above 1600 and this upside trend. So important. It'll be interesting to see if we can see price finding support at this level and pushing higher. Failure to do so would see ultimately a consolidation on the underside of 1600 with a potential for further downside movement to at least 15900 and 15800 and ultimately 15700 being our next potential target over the next couple of days. Got to see price trading above the trend line and above 1600 to still be confirmed as bullish upside. US dollar Swiss franc, good old Swissy. Next one on a daily, you can see quite clearly that we had a bounce to the upside, and this comes in around on the US dollar Swiss franc, where on the euro Swiss franc is the 120 area. Around the 8600 mark, you can quite clearly see this is where the intervention occurred. The Swiss government pegged its currency at 120 on euro Swiss franc, and this is where euro US dollar is, roughly around the 85.50 mark. And you can see price has been falling steadily since then, and testing, coming close to testing that area where we've seen the price being pegged at. Failure to see price bouncing higher now on this downside trend, and failing to find or see price actually failing and trading higher than the institution moving average here at the 87.50 mark could potentially look ideally likely. We could see another downside trend forming. You can see the downtrend just recently. I'll put in black. You can see swing low, as if we've headed lower to this price. If we don't see price correcting at this area here and bouncing higher than the institution and then making its way back up to prior highs here at 9300, and we see a consolidation and a break lower. If we see a break below 8600, which will probably reflect on the euro Swiss franc breaking below the 120, then we could see the Swiss government intervening again, as we saw previously. We saw this morning that the Japanese government has intervened. Not much price action since the intervention, but it intervened nonetheless, and we've seen price bouncing higher for the US dollar. Could we see the same thing up in here? We've seen a break lower, slight consolidation going into the European session open this morning on the 31st of October. We've seen price trading against the institution moving average here, which is at the 87.50 mark. If we fail to see price trading above the swing low here at 8800, I feel we don't see it trading higher, then ultimately could see an exhaustion or consolidation yet again at the underside of this trend line, and we see a break below 8600, which will take us below the psychological 120 mark on the euro Swiss franc. Then we could see the Swiss government intervening. So it's quite an interesting setup. It'll be interesting to see what happens in the next couple of days or this week, where the US dollar and the euro trades against Swiss franc going forward. So one to watch. The CTC on the daily is red for selling. Ideally, we'd like to see a close below 8600. A close below 8600 would confirm that we're looking for further downside movement on this pair. And ultimately, we could look at roughly around the 8350 mark as our next potential target, as we've seen consolidation here in the past. And it'll be interesting to see what happens in the next couple of days. So bide your time, wait for a definite confirmation from the market, and then you trade the confirmation. So hang on tight, it could be interesting this week. We go into our intraday charts. You can quite clearly see the consolidation through the latter part of the US session on Friday and going into last night's open. You can see a definite bounce to the upside. And if we fail to see that support level at 8600 becoming a true support, and we don't see price bouncing higher over the next couple of days, then what we could see is potentially a failure. You can quite clearly see we've had price support and resistance or consolidation in these areas, noticeably to the upside. And it is a strong support and resistance level roughly around the 8900 mark, which is just roughly around the downside trend on this pair. So it'll be interesting. We don't see price bouncing higher and retesting these areas here. Then we're trading below the institution moving average, which means that we are in a bearish setup now on a 4-hour chart. We've got to be trading above that area there at 900 to be still classified as bullish upside. Failure to do so, we're still trading negative on this or consolidating to the negative to the downside. A break below 8600 would definitely start seeing bells ringing, because that'll just reflect on the Euro Swiss franc as trading below the 120 peg area. And there's mention that the Swiss government wanted their price to be trading above 150 anyway, so they could step back in again to actually change things around. So want to watch. So be careful about it going forward. Last pair of the day is the US dollar against Japanese yen. You can see on the daily the intervention candle, huge move to the upside. It was only going to take days. I'm here looking at weekly charts of this pair. You don't have to look at a weekly chart to see that we are trading on the bottom end of the support line, and sure enough, we saw a bounce higher. And it was bound to happen. A lot of consolidation on this support, and because we're trading at an all-time low, a pre-World War II low, then it was bound to happen. And we've seen price now heading towards 80, which happens to be a price supporting resistance level on this pair. So if you go back to a daily, for example, there we go. You can see huge upside candle back up towards the 80 mark, which is the institution moving average area. Got to be trading above 80 to really see this move higher. Otherwise, we're going to see what's happened before, trading into a consolidation range, with ultimately CTC still extending negatives. The same would happen over here previously in March. This we saw the intervention previously, which coincided with the earthquake and tsunami. Here we had another one back in August. Didn't quite stack up, and because the market sentiment was still negative and it still closed lower than 80, which happened to be price support and resistance, that sentiment didn't quite follow through, and we saw price reverting to the downside. It's the same with this one over here. I feel I'm not going to be touching this with a barge pole until I actually see 80 being breached and support being found, and then ultimately looking at further extensions higher. Until then, we could potentially see price moving slightly higher with a bit of with inconsistency or consolidation ranges, so small trading range to the upside. What we're doing now, as you can see, price is failing to find that support and resistance above the 7900 mark, which happened to be a price support and resistance quite clearly here. Consolidation range, ideally 7900, got to be breached, finding support, and then we could potentially see further upside movement intraday to those levels at 80. You can quite clearly see over the past couple hours, price just moving sideways and not pretty much going any further. So in my eyes, yes, we've been intervention, fantastic. Are we going to see price take it now and trade higher? If so, then we need to see 7900 being found as support. See a noticeable support area being found on, say, the 30 or hourly chart, and then look at 80% at the 80 on a daily time frame as a potential target. So until then, have a fantastic trading day. Please be aware we had some moves in the market. We are trading at some very strong support and resistance level, or when we just need confirmation. Big one to watch from this week, I think. But personally, on a personal note, I think as everybody can start focusing their thoughts on Italy and Eurozone. Italy is quite clearly a problem area. We know that Berlusconi has been asked by European zone countries to try and see if he can work on his debt issues. So I think for European zone, the Eurozone in particular, I think the focus has shifted now to Italy and how they're going to sort the Italian problem out. That's going to be a big one to worry about, because the Italy in general carries a hell of a lot of debt, a huge debt on their books, and it'll be interesting to see how the Italian government actually goes about trying to reel in those debts and what measures they're going to bring in to try and cut that deficit. So it'll be interesting to see what's next on that one, because I feel if there's any two that are really going to pose a bigger threat than Greece, it's going to be Italy and ongoing issues in Spain in particular. So be aware, we're not out of the woods yet, so heads up, we could be seeing a lot of consolidation over the next couple of days. Euro yen, as I mentioned, got to see price trading above Mars 79. If we can find support above 79, then ultimately we could see potential higher swings to the upside. It's important it stays above the area because that happens to be a price support and resistance on the daily. For example, you can quite clearly see a hesitation here at that time frame or thereabouts. Got to maintain that. If it fails to maintain that, then obviously we'll be seeing just a bounce, and then we're going to see price actually find further momentum in the downside as it's done previously. So take that into consideration. Until then, have a fantastic trading day. Nikki and I are going to be teaching students over the next couple of days, so we will be in and out of the markets and in the chat room too. So have a look and see if there's any videos being posted on our chat facility. Until then, trade serenely.